Welcome back to Cover Your Assets, Financial Tactics for the 21st Century. 855-835-8500. That's 855-835-8500. Derek, talk about what happens if you go to coveryourassets21.com.
Well, I think that the big thing coming into the website is you're going to be linked into the group that we formed here. And that's we talk about this on the show all the time, on the professionals that we've put together and the partners. I think that you're going to find out that it's the one-stop shop. I mean, if you need real estate advice, it's going to be their financial advice, budgeting. The help to stay in your home. I mean, this is the place to go, and that's going to help link that area up.
Well, we've talked about a couple different topics, Kelly, as you mentioned. We've talked about who can refinance now and what's possible in that. And can you really invest in real estate again? Is it safe? Does it cash flow? Is that accurate? Or that's someone else that's maybe in a little bit different spot? But if you look, these are very general topics. These are government programs or an industry or a marketing strategy. Those are very general things. And what this group does is make general conversations very specific and tailor-made for that individual so that they can forward themselves in these very trying economic times.
And I like the idea, though, that you will kick a client. Like, Derek, if somebody comes to you utterly convinced that they need a short sale, and you can talk with them, and you have a suspicion that maybe that's not the best decision for them right now, you're not going to put them on the market just to get a transaction. You're going to probably send them over to Todd. Absolutely.
And we talk about, the success rate in short sales, and we're about 90%, and the national average is 35%. One of the big reasons for that are a couple things. One, we don't take on all of our short sales because we know that we can't help them. And that's where they get shifted to Todd or Craig, if their situation fits that better. And vice versa, Todd will send us people that he knows that a short sale are key. So, it's not a magical marketing plan, that we have, or it's the team that we've put together, the attorneys, the negotiations, but it's really not taking on every short sale just to throw it at the wall and see what happens. And that's what I think happens a lot in this market, which is really, really unfair to people trying to sell their house in short sales.
Sure.
They go in and they meet an agent, and the agent's only motivation is to list it.
This is what we talk about, is that our heart is not navigating a house through a transaction. It's negotiating a family through the transaction. We're not always worried about how the real estate commission turns out. We're worried about how that family turns out and what deficiencies they're up against, and are they in a better place?
Right. Well, and that's exactly right. And that's something that we all are very, very busy. And we don't need to take on, false deals that we know are not going to sell in a short sale. We're going to do what's right for them, and we're going to help educate them and help them learn and understand what their options are. And that's what really this is about.
When somebody comes to see me, I can show them all the different options. Has nothing to do with any motivation. Tell them what the implications are of each, and often you're telling people options that they've not even considered. They do become focused on one particular issue, and they live and breathe and wake up in the middle of the night thinking about it, and it's all that's on their mind. When you open them up to all of the possibilities and the options that are there, they may wind up going in a completely different direction that they didn't expect. Having said that, when short sale is the option, and I send them back to Jason and Derek to short sale, there's no longer trepidation of whether or not they got the accurate information. They know, bottom line, they got all the information they need, and they can comfortably and confidently make that decision. They've decided to do the short sale. They don't want to, pull out all the stops to keep the house because it's not the best financial move for them. And so now short sale is going to succeed because this is what they want, and they won't take one step forward, two steps back any longer.
And and you help them figure out what this move really means in the long-term big financial picture that they have.
When it comes to a house, it's almost always the pivotal issue, and the question is always to stay or to go in a house. If a person can step outside of themselves and look at a home objectively, and if you look at a modification being a possibility, and you say, even if you modify this loan, it's still going to be a house that's not affordable to me, well, then a short sale probably isn't the best option. But people, because they want to maintain in a financial crisis stability, sometimes for themselves, or maybe more importantly for their family and their children, they'll hang on to a home with their fingernails and do anything to keep it when it could be the absolute worst financial move they could possibly make. Being financially stable is more important than the house. And people need to get over that, because your kids see the stress in your eyes when you're trying to hang on to this home. And if you're to rebuild your life, how will you do that when every dollar that you're spent, that you have available, is being put into a home that may not be making you any money? Better to step back, take a look at what's out there, and say, look, if I take a step back in my housing payment, I've now got the money to be able to build my finances and create stability for my family. That'll be more important ultimately than keeping the home.
And I love the topic this week on Cover Your Assets. It's called Upward Mobility. And when we say that, we mean from wherever you are. I mean, there's some place that you can go. So we talked a little bit in the last segment, and I love this. And I think this is a very key point that people should really take away from this show. Every week we talk about it, that cash flow has now replaced appreciation when it comes to real estate, guys. Can you explain what that means? Because it's a huge importance to the recovery.
Right. And that's it is cash flow, and it's instant cash flow. I mean, the second that you're closing on that investment property, as a rental property, I mean, it is instant. And that's something that, in the past when investors were investing in real estate, they were going in and they were anticipating on the appreciation of that property. I mean, I can't tell you how many times we had investors 4 or 5 years ago that, well, I just want to break even. Well, what do you mean you just want to break even? Well, I just need to break even to make the payments, because in 2 years this property is going to be worth another $100,000, and that's $100,000 of equity that I now have. And that was really how they invested. And it's changed now. And it's changed for the better into the fact of now you're buying an investment property, a rental property that is cash flowing right out the gate. And the properties are affordable, and the renters, I mean, the rental market is fantastic. I mean, and quality renters, that are coming in and they're making this possible for an investor that are buying these rental properties. It's amazing. And I can give you an example, a quick example of a $280,000 townhome that sold, 5 years ago, picked up for $117,000.
That's amazing.
Yeah, and within literally the day that they closed, they had 6 phone calls from renters trying to rent it for max amount in that area. I mean, it's just amazing. And we give, for first-time investors that come in, first-time investors, real estate investors that are looking at buying rental properties, well, how do I know how the numbers work? We'll supply, cash flow analysis and help you walk through that, and so that you can run the numbers and understand what type of investment that is for you. I mean, we won't, we'll guide you through that. And when they
Landlord 101,
right, and when they run the numbers on these cash flow analysis, and they look at the money that they invest and what the rates are at, they go, well, this can't be right. My cash and cash return is 18% if this all plays out. Well, yeah, that it's amazing. It's amazing with the opportunity right now in rental properties.
Describe a couple of the different types of investors at different levels. Like you just talked about the amazement of maybe a beginner.
Yep.
Talk about people at maybe the higher levels, a little more seasoned, and the real sophisticated people that you're talking to these days.
Yep. I think the beginning real estate investor, we always suggest the townhomes. They reasonably priced townhomes. One, they rent well. There's an association that's on it that's managing a lot of the exterior stuff, and it's one property. And I think that the opportunity to rent that type of property is really, really good in the type of renters that are in there. I mean, that's a fantastic cash flowing. As you get into the more advanced, you start looking at more multi-unit stuff. The advanced investor, they're doing 1031 exchanges where they're selling a 4-unit and they're exchanging it into a 8-unit to protect some of the capital gains, or all the capital gains moving up into a 1031. We have some fantastic opportunities through our partners, Entrust, self-directed IRAs. I mean, that's something that I think that it's becoming more known now. But 4 or 5 years ago, even some of the advanced investors, they didn't even know what that was. And what that allows people to do is transform their IRAs into a self-directed IRA and invest that capital into real estate, and then those profits go back into the IRA. And we have resources like that for people, and it's
we don't have to be concerned with capital gains and doing the 1031 exchange transfers to be able to eliminate the capital gains that would be on the increased value when you sell. Really what you're saying when we talk about the new now is, in the old days, if you could just break even on real estate, you would get your carrot at the end in so much as you'd sell in an appreciating market. Here, the difference in the shift is, hey, you're still going to get your money, but you're getting it month over month in the form of cash flow rather than getting it at the end. hey, what's the difference? If you're making money, you're making money.
Well, and the other big thing to look at is, as you just pointed out, Todd, is even if you buy and I don't, our clients tend to buy properties that we believe are appreciating because they're buying at a distressed value. But even if they are buying something that is depreciating, their investment is based on that cash flow. So in 3 years or 2 years or 1 year, when the market turns around and everything is appreciating again, that's just a bonus to what they bought into.
And the thing is that you can have a cash flow that is so strong that even if the market does decline, you're overcoming that and still getting a reasonable rate of return that beats what else is out there.
Exactly.
So it's shocking what actually can be accomplished in real estate, but you've got to open your eyes and see it all. The fact that your home is upside down doesn't mean that this isn't a tremendous opportunity. My God, we have one of the top 3 rental markets in the entire country right here in the Twin City area.
And we don't have to depend on what Greece is going to do in January to realize the gains. This is Cover Your Assets. We'll be right back.